Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to analyze the markets and talk about what's going on. Okay, first of all, the US dollar index started out strong on Sunday before ending week. Kind of has something to do with the Kim Jong-il death. His brat son is coming in to take care of his empire, which really isn't much of an empire anyway. We'll just call it an empire. And basically, the young general, young general, uh, Kim Il-sung is going to come in and reign over the North Korean population. So apparently we think they have it under control. Now, we don't really know what's going on behind the scenes because, again, we don't really have any political influence over North Korea, and we don't have real press or non-objective, non-biased press coming out of North Korea. So we don't really know the condition of North Korea too well. We know basically that their economics kind of stink. Agriculturally, they're behind. You know, a lot of people are starving. Yeah, we get a basic idea in those types of aspects, but we really don't know what specifically is going on politically. So right now, we had a knee-jerk reaction. Asian stocks are selling off, and European stocks aren't doing too hot either. You know, I mean, it's a flat to negative day is what we really anticipate coming out of the U.S. session, Monday U.S. session. Now, it's not going to be too bad. It's just market behavior. You know, they're just reacting just because we can. Now, let's go ahead and analyze the Dow Jones component. I think the Dow Jones component is going to trade flat for the year. We're going to end where we started, so somewhere around 11,600. And I do believe that based on what we're seeing, we're going to consolidate on Monday. Perhaps we'll close below the 50-day moving average. I really don't know, but perhaps we'll close below that 50-day moving average. And again, a lot of what I'm anticipating at the very end of December is 11,600 to around 11,800. So a lot of people that were following the S&P 500 could say that they closed the year flat. Now, by saying we closed the year flat, at the very least we could say we didn't make you any money, but we didn't lose you money either. Now, that's kind of misleading, but that's kind of the way I'm looking at it based upon where we're finding support. We're going to consolidate, and we're going to stay flat for the year, for the most part. It's going to be a lost year for the markets, but going into 2012, I feel that we're going to have much more weakness, mainly because, again, we have European austerity, we got U.S. austerity, China's growth is slowing down, we got political risk in the United States, North Korea, which concerns the whole Orient, we got European austerity, political risk associated with that. That's bad. We got U.S. political risk, and we have U.S. austerity. So again, we got austerity going on in two regions of the world. One region of the world is slowing down economically, and it has political issues. So that really does it in for why asset management is having a hard reason to be buying stocks right now. So again, the whole economic implication is really negative. It's not constructive. It's pretty negative. European Japanese yen, this is on a longer term downtrend. Let's just analyze it. If you started the year out at the very beginning of 2011 and you decided, okay, I am going to own Japanese treasuries, okay, well, first the process is you have to take your euros, you have to buy Japanese yen, and then with that Japanese yen you would buy Japanese treasuries. Now for all of you, those European asset managers who did that, they would have done it at around 107. You know, 107 isn't bad at all. Let's think about it for a second, because you would have earned 7% on the net currency appreciation, plus 2% on the bond yield of a 10-year Japanese treasury. And then perhaps the bond would have appreciated a little bit because of uncertainty. So again, bond appreciation, currency appreciation, and bond yield. So overall, you get 9%. Since the stock market kind of did flat to negative, but the European carry trade with the European, you know, if you bought the Japanese bonds, the carry trade or the flight to safer assets or the risk-off trade or whatever you really want to call it, it's really a no-brainer at this point to be buying Japanese treasuries for currency appreciation, bond appreciation, and bond yield. Makes perfect sense. Let's look at the numbers real quick. Stocks did poorly, bonds did great, but if you get currency appreciation with that, you get cream on the crop. Duh! A lot of people are going to continue to buy Japanese treasuries. It just makes perfect sense. And we have a negative 100 score on the Euro-Japanese yen to boot. Main reason is asset management is doing exactly what I think is the most logical thing to be doing if you want yield. Okay, so again, longer-term downtrend on the European-Japanese yen, and I believe we will continue to see that in the year of 2012. Silver spot. I think silver will continue to go lower because silver has had a humongous tail wick all the way down, and that's really a flash trade is what it really was. And it's signifying somewhere below $23. And the main reason is because every time we get these quick flash trades, right, flash trade, eventually the markets always touch it at some point in the future. I mean, we've had quite a few blips, and the bigger the blip, the more likely it is to happen at some point in the future. The longer the tail, the longer it usually takes. In this case, this is a $7 tail. So this is more or less a 30% tail. So we would have to see this thing decline by 30% with real price action, not flash trade, but real price action. And that's going to happen perhaps Q1 2012. It's not going to happen immediately off the bat, but I can see somewhere Q1 2012 us trading at around $23. Now that doesn't mean we're going to be buying silver at $23. No way, no. I would not buy silver at $23. But at the same time, maybe if we went down to $10, that's when I'd say yes. Silver is good down there, yes. But for right now, silver is a definite no at $23. You could see a bounce at $23, but I do think $23 is a price area or a price target we could reasonably assume it getting to. And the main reason is because, again, when you see this type of flash trading behavior, this is kind of like Wall Street's message to other people on Wall Street that, hey, we're going to push this thing down to 23 in the near-term future. And it typically plays out 70–80% of the time. So again, I could reliably anticipate $23 per ounce somewhere 3 months down the road. Gold. I think gold will eventually jump up a little bit, perhaps touch the 200-day moving average. But again, every time you close below the 200-day moving average and confirm below it, we've had 5 sessions, no, 6 consecutive sessions below the 200-day moving average. The story's pretty much done. Perhaps we'll go back up to that 200-day moving average, perhaps go up to around 1,630, 650. 1,650 wouldn't be that bad of an area. But again, I do anticipate us going down over the longer term. Over the longer term, I think we're still in a longer term downtrend on gold. So assets don't just fall, perpetually. They have a tendency to rise up a little bit, then continue to fall. Rise up a little bit, then continue to fall. So we'll probably retest the 200-day moving average before continuing the long-term downtrend on gold. Okay, so that does it for me for today. If you guys have any questions, leave a comment right below, and I'll try to get back to it as soon as I possibly can. And if you guys have any questions, be sure to also consider emailing me on YouTube. I do check my inbox once a day. And if you guys should, if I were you guys, I would subscribe, because I will always, come out and create more YouTube content for all of you out there who want to learn more about this kind of stuff and kind of follow me on YouTube. So take care, folks, and have a wonderful trading session on Monday.